All right. Good afternoon, everybody. Welcome to this session. I'm going to kick us off. Hopefully, we'll get some latecomers over the next few minutes. But in the meantime, I am going to ask a polling question, which you can have a crack at, and it'll be interesting to see what your take is on that. I'll mention that in just a second. This is the Cashless Society and Fintech panel. My name is Axel Threlfall from Reuters in London. We have an excellent panel lined up for you this afternoon. I'll introduce them in just a moment. If you were here for the FinTech session last year, you'll note from the focus this year, it's a little bit different, hence the Cashless Society part of the title. The emphasis this year is more on the digitalization of payments and the implications of that for our economies and societies. Just a few brief words to set the context for this discussion. It really is hard to deny the steady march both in developing and developed nations towards cashless societies. There was I don't know if anyone saw this, a poll, a survey conducted by Ipsos for ING Bank. Last week, I think these numbers came out. More than a third of Europeans and Americans would be happy to go without cash and rely on electronic forms of payment if they could, and at least 20% already pretty much do so, which I found fascinating and quite eye-opening, those numbers. The extremes can be found in Scandinavia, where cash has grown, as it says in the note, rare to the point that the world's oldest central bank, Sweden's Riksbank, is considering issuing a digital currency. We are extremely fortunate to be joined by a representative of that bank today, and we'll get the very latest thinking from the Riksbank on that. Will cash ever disappear completely has got to be one of the questions we'll ask. It seems to me that it's unlikely anytime soon, given the differences in approach, in culture and the history of countries, that we'll see a well-timed, harmonized global push in this direction. But we'll examine those differences this afternoon in more detail and discuss some of the obvious advantages of electronic payments, and we will also examine the risks, very importantly. Let me briefly introduce our panel, then I'll ask that. In fact, let me ask the One Assembly question first, and whilst I'm introducing the panel, you can have a crack at that, and then we'll take a look at your response. Starting on the far side, Gianluca Riccio, Head of Strategy and Framework in Commercial Bank Risk, Lloyds Banking Group, and Vice Chair, the Finance Task Force for BIAC. Next to him is Tad Korzynski, Undersecretary of State, the Ministry of Economic Development in Poland. Hans van Dalfsen is Editor-in-Chief of the Dutch street newspaper Zed. Primoz Supan is CEO of the fintech startup Mbills out of Slovenia. And next to me on this side, Ms. Cecilia Kingsley, Deputy Governor of the Riksbank in Sweden. The Assembly poll question is this. Do you think the digitalization of payments fosters financial inclusiveness? There's a yes, a no, and a don't know. So have a think about that, and I will come and we'll get the responses up on the screen in just a few moments. Let me first, though, sit down and throw an opening question to our panel, and then I'll pull those responses up. Right. Here we go. Can everyone still hear me? 1, 2, 1, 2. Here we go. All right. An opening question, a broad question to each of you, just that will allow you to lay out your positions. And of course, it depends on which country you come from. But let me start, Cecilia, with you. Is physical cash disappearing? Will it ever completely disappear? Is it a good thing if it does completely disappear?
Thank you. So will it completely disappear? Well, if we just extrapolate current trends in Sweden, and the trend presently is that we've sort of in value of notes and coins in circulation in Sweden have dropped by about 50%, 50%, halved in the last 8 years. And if we just extrapolate that trend, the last note has probably been handed back to the Riksbank somewhere later part of the 2020s. Will that happen? No, I don't think people will reject cash altogether, because when we look at cash, and this is a very fundamental issue about what money actually is. Money is a store of value, it's a unit of account, but it's also a way of making payments. And those three ingredients are very important. And I think as a store of value, cash will still be around. There will be people who don't trust the state, or that don't trust the banks, or they just want to have it at home. But as a way of payment, especially a way of commercial payments, your daily groceries, coffee shop, then I think cash will be no more in at least not in the Swedish society in the few years to come.
Is it fair to, sorry, we're going to have to share this one. Is it fair to say that Sweden is probably the most cashless society in the world right now?
If you look at the indicator I mentioned, the value of notes and coins in circulation, I haven't seen any other country doing the kind of rapid disruption decrease as we are doing. On the other hand, if you're looking at what people are replying when we ask them in various surveys, do you still have cash? Do you have access to cash? Do you pay with cash? The numbers are still quite high. So people are happy to adapt to the technology of electronic payments, and more and more people realize that they can move on in life very well without having any cash. They have an instant payment app called Swish, and then they have the bank cards. Yeah, that's about it.
All right, Slovenia. Obviously, you are the chief executive of a fintech company, and it's in your interest that the cash disappears. But tell us what the context looks like in Slovenia first.
Thank you very much. In Slovenia, currently, as many other countries, there is also 60% still payments in cash. So that for us as a fintech startup is quite huge potential. We see our mission as promoting digitalization and also going to the cashless way of payments. Why? Because the generations that are coming, the millennial generation, got used to the Twitter-like experience, which means that everything must happen in an instance. And for example, if you take a look how much time you need to wait in order to get a banknote from an ATM, to find an ATM, and then also to pay with banknote and get change back, for the users, this is something that's quite uncomfortable, but it's also becoming more uncomfortable also on the side of merchants. We speak a lot with merchants and with our mobile wallet, where we connect the bank account and the mobile number in a mobile wallet. We make easy integration for the merchants and for the shops, and making them easier to pay, because we see payments as a key area that we need to focus. And on the other hand, when we have digital currencies and we have electronic money, you can track it. On the other hand, physical money, if you lose it, nobody can track it, or if you get fraud and thefts, here is track. And thank you.
All right, so good. So sorry to interrupt. So still big business for you. A lot of potential for your company in Slovenia. We'll talk more about that in just a second. Hans, you have said, I think this is a quote from you, like Scandinavia, we're close to being cashless in Amsterdam, but we need simpler, more convenient solutions that work for everyone. Of course, you're speaking for the homeless who sell your newspaper and have trouble finding people who are willing to pay in cash.
Yes. Cash is disappearing from the streets of Amsterdam. So the number one excuse of somebody who might want to buy a homeless paper when a vendor comes up to them is that they say, I don't have cash. So our vendors came to the office saying, people don't have cash anymore. What should I do? Which is quite a basic problem for them. So we tried to find a solution. We did a test, had vendors with PIN machines on the streets, and it was still too early, I think. It will take a couple more years before it's working that well that even homeless paper vendors can use it.
Okay, thank you very much indeed. Tad, I think that one in front of you works, actually, if you want to try it. And then you can interrupt each other if you have your own, you see. How do things work in Poland? What does the context look like in Poland? And what do you, working for government, having come from the private sector, want to see happen?
First of all, yes, it's working. First of all, cash and cashless society, I think only central bankers are interested, commercial bankers, fintech companies, or the owners want to sell something. The consumer is not interested in cash or cashless payments. He wants to buy a coffee, he wants to pay for his groceries, he wants to fill his petrol tank. He's not interested in a payment. That's totally secondary. So for the consumer, the most important is the customer experience for making that payment, because he doesn't want to. He's looking at the goods he's buying. So that's probably the most important. And here in Poland, we have a paradox. 20% of the turnover in Poland, of consumer turnover, is electronic, 80% in cash. Of that 20%, 50% is withdrawals from ATMs. So in fact, it's 90% is cash. So it looks like it's a relatively backward society when it comes to making payments. But when you look at the 10% that is made by electronic means, mostly cards, but not exclusively, 85% of those payments are tap and go. So we're probably, apart from the UK with the TfL, the London Underground and buses, we probably have the highest rate of electronic, most advanced payments in Europe. So it's a paradox we have. Now, the reason why we have that is customer experience is the most important for the consumer. If it's going to be a bad experience, he's not going to use it. So cash, if it's better than electronic, he's going to use it cash. If electronic is better than cash, it would be the other way around. Now, the second aspect, of course, is if you give a consumer electronic payment means, but you don't give the consumer the acceptance, he's not going to use it either. So that's the second problem we have in Poland. We have 1.5 million fiscal registers, so where you can go to shops and buy, but only 500,000 POS terminals, which means, in theory, you can go to the first shop and pay by card. The second shop, you'll take your card out, he won't accept it. The third shop, you take your card out, won't accept it. So the fourth shop, you don't take your card out, you take out cash. And that's what we're working on. So in Poland, we're working on to level the playing field for the consumer. So it's the consumer's right, not the obligation, the right to pay either by cash or by electronic means. The flip side of that, of course, means that the merchant is going to have to be, he's going to be mandated to accept electronic funds.
And sorry, it's the consumer's right now to pay it out. It's not yet.
That's what we're bringing in at the moment.
And how quickly can you bring that in?
Well, the first, of course, is before we can bring that in, we've got to create the acceptance. So we're mandating from the beginning of next year. But again, we've got to take into account this, the supply side of POS terminals. It's going to take 3 or 4 years before we can get 100% acceptance in Poland. Now, again, cash is expensive, but everybody thinks it's free. In fact, in Poland, we calculate it's cost about 1% of the GDP, so it's about 17 billion Polish zlotys, so about 4 billion euros. That's a lot of money. Everybody thinks that's for free. But then if you tell a shop to accept cards and the transaction costs him 0.5%, he says that's a lot of money compared to zero. But so we're actually working together as a whole market in Poland. So the banks, the ICSs, the acquirers, and the big merchants together to build a very, very big fund in Poland, which will actually pay for the POS terminals and zero off the fees for at least for the first year for the medium-sized company, and the smaller micros for forever, hopefully.
Okay. All right. Thank you very much indeed, and we'll delve into a little bit more detail on that in just a moment. Gianluca, you know, as a representative, I guess, of the B20, you could talk for business generally, but also as someone who oversees risk. That's not working either. As someone who oversees risk in a commercial bank, how do you see the context now, and how beneficial is this move towards a complete cashless society, do you think?
Thank you for the question. I think in terms of the line of direction, the line of direction is clear. And it's very important in the perception, so the perception of the cost and so on. But the line of direction is clear. Doing a little example, a few years back, there was a letter written to someone which was saying, thank you for sending your invention. We like your electric toy, but we don't see any commercial use of it. That letter was written to Graham Bell, and that toy was the phone. So, and the letter was written by the president of the Telegraph Union in the US. Now, that was a question of understanding and perception. The same thing, the same line is happening here. So the question for me is not so much an element of are we going to be a cashless society, because the direction is there. The question is how we are going to be a cashless society. So the cashless comes with risk associated to it. The main driver under cashless is data, use of data, which means cross-border treatment of data. Each country is doing their own regulations around it, how they pass across the countries. And the how is quite a big element. And in terms of the B20 and G20 conversation, it is starting to develop that thinking, and there is an element of data, but when we talk about fintech, we have also, fintech is a word that is used and sometimes abused. Everything that is on an app is fintech. It depends what that fintech corporation is doing. Is it a platform, or is actually lending? And they are very different activities. So the payment system is one thing, the platform is another thing, lending is another job. Just to give a flavor, in Lloyds, and this is just one bank, in credit card applications, about 40 to 50% every year are fraudulent. So the application, so you don't even pass the first test, but there is people trying. So and as things get more and more cashless, and more sophisticated in trying, because a big part of the investment done is against catching the frauds and so on. So how we manage that data, how we manage the information, how.
Okay, very good. Thank you very much indeed. And again, we'll come back to regulation. Thank you for the opening comments. I haven't forgotten about that polling question. I will get to that when I talk specifically about the inclusion piece. But I'd like to pick up on something, Tab, that you said, and Cecilia, I'd like to hear your views on this. There seems to be a lot of disparity. There seems to be everyone deals with this in different ways. You know, we talk about making it, enshrining it in law that the consumer has this right or that right. In Sweden, it's not something you do. It's not that controlled. Do we need a harmonized way of doing things, for example, in a trading bloc like the EU?
I think it's too early because different countries have reached different stages in this development. And I think that's natural. If we expand the view on what money is, and we have been having money for thousands of years because it solves the problem of making a transaction. But in order to work, people have to trust it, and it has to be efficient, and you have to have economies of scales, otherwise it will not be very efficient. We had metals for a long time, and then 350 years ago there was one innovation in this business, and that came in Sweden. Actually, we started to launch paper notes as a complement to metal notes, and then another 300 years later we got electronic payments. So that's a sort of next step. And it's very natural to try to look into what is the next step now. And the Swedish answer to this is we're going to have to, in the central bank, investigate whether we need to issue a digital version of notes and coins for those who want to still be able to have a central bank version of money. But others are somewhere else in the evolvement, and they have to do their thing as well.
Is that a problem, Ted? I mean, everyone gets on with their own thing. Poland gets on with its own thing. When you make these decisions in government, what's driving that?
Okay, I think there's two things. I think for government it's important to drive forward. We're not telling the community, the market, how to solve the problem. We're not telling them they have to use cards or they have to use a telephone or any other electronic means. We're just saying that electronic payments and cash payments are identical, and fiscal receipts, whether they're paper or electronic, are identical. Now, how the market then develops that is for the markets, and let's see. However, I do think it's important that we do have some central unit that somehow or other brings together best practice and brings together standards, because one thing we haven't talked about yet, nobody's mentioned it, is internet, purchasing on the internet. Sure. Now, it's okay as long as I purchase in Poland on the internet. I use Polish payment systems, electronic, because again, something which probably you have to mention in exclusiveness. What do we mean by that? Because a lot of people have bank accounts, so they will be treated as inclusive, but then let them, like to see them use Uber or purchase an airplane ticket on the internet if they don't have a card. Or other electronic means. So we have to bring in electronic payments which are accepted in the internet, and Polish consumers will not be able to buy anything from merchants which are based in Sweden if they don't have access to the payment system in Sweden. And so are we going to have 27 different new systems and the whole fun that's going to create?
Okay, go ahead, Gianluca.
No, was just confirming the point. That is exactly the point I was going at. So it's important to do inside the countries, but the cross border and the cross services, because different activities are now going into the payment system, in the lending system. One example of all, everybody knows Alibaba. When I met Jack Ma, he was saying that the single business that is growing most in the universe of Alibaba is payments and lending, because in China they are starting to do lending, small amounts, but they are starting to do it, and this is the single one growing. So if different countries have different standards, it's not only a question of ability to connect, but is also creating arbitrage opportunities that who actually is able to connect will leverage, and the damages is much bigger than the benefit at that point.
Let's talk a little bit about the technology. I don't want to get too into how all of this works. You have the Swish app in Sweden. M-Bills is your product. Primos, just talk to us a little bit about how this works, and then we'll get on to the privacy piece and the lack of anonymity as a result of this.
Okay, thank you. Our mobile platform connects users' bank account with the mobile number, regardless on which bank the user is. So we are independent regardless. For example, if we would be just another mobile banking app, we would just cover the users which are users of certain bank. So in our case, we are independent in this way. And we focus on that we can send money directly when entering somebody's phone number, not paying attention to banking working hours. So the classical electronic payments is based on the banking working hours, and users need to take into account when they send the money electronically in order to get it on goal on time. In our case, when you enter the mobile number, it goes instantly 24/7, 365 days per year. And in connection with other issues. We started as an app that was receiving mobile way monthly invoices. And this was possible because the government started in 2015 legally that every company that does business with public sector has to issue electronic invoicing. And we saw this as an opportunity so that when an invoice, for example, if I have to pay my monthly bill for electricity and so on, I get it directly on the M-bills. And this is something that we saw is also improving the payment discipline, because I can access the bill everywhere I am, regardless if I'm at home or I am in another country. And the app reminds you on time that you still need to pay. And the other thing, when we discussed before the web payments, we got integrated into the platform e-administration from Ministry of Public Administration in Slovenia. That enables us, for example, if I want to prolong the registration of my car, I can do it all per web, and I just scan the code there with our app and make simple payments. And the fiscal registers, which were introduced last year, were also binding every company that needs to issue a fiscal register, and the system is connected with the tax authority.
Okay.
Yeah,
Yep.
and I'll just
Finish that thought. Yep.
yeah, enabled us to easily integrate and just scan the bill and pay easily. And this is anonymous. But on the other hand, to do that, we also are doing full know your customer. So each user that starts needs to be checked on the identity at the start, so that we prevent like frauds and money laundering and financing of terrorism.
All right, thank you. Tad, do you have a system like this in Poland? And why wouldn't you have a system like this in Poland? You know, I don't want to do an ad for his company, but and we'll come on to the privacy issues in just a second.
Please do make an ad, but we actually do have a system, very similar system. We launched it about, I think, 4 or 5 years ago between Polish banks. It's based on a telephone that you receive a one-time token, six numbers, which you have to key in at the point of sale. Now, this is very interesting because on the customer experience side, you can pay using a telephone application both in point of sale, physical point of sale, and you can pay the internet. Now, in physical point of sale, it just hasn't taken off, and everybody knows why, because when you compare the tap and go from a card experience to taking out your telephone, asking for a 5 to 6 digit token to be put in by the cashier, it just doesn't work. The converse is in the internet, and surprisingly, security is secondary to customer experience, because on the internet, as we know, if you use your Visa, MasterCard for a payment, and the goods don't arrive or the service doesn't happen, you can you just claim the money back from your bank on chargeback. You can't do that on other means of payment. So on our Polish telephone payment system, you can't do that. But consumers use the telephone because they only have to put in those 5, 6 digits as opposed to the 16 digits of the card plus all the other details. So customer experience is driving everything.
All right, Hans, you wanted to come in. Go ahead.
Well, we are talking about financial inclusiveness and anonymity. The whole digital payment system is very anonymous, and you were talking about lack of anonymity. For the homeless who are excluded in a large sense, they want to be included, and a transaction with cash is a social transaction. It's very hard to have a conversation with somebody who does a payment online. We need more social exchanges. At least in the people I represent.
Just very quickly, Cecilia, before we come to you, I know in Holland or in Amsterdam, you trialed the iZettel payment system for the newspaper, for your newspaper, but it did not work. Was it? Why was that? Was it a technology thing? Was it a fear of over privacy? Or was it a lack of interaction that ultimately made this fail?
I think for the vendors and also for the people who bought the paper, it was too complicated. So they had to juggle a pin machine, street paper, an internet connection, a Bluetooth connection. So that will go away. But so in a couple of years, it will be very easy to do. And we did it because we wanted to be early, and we wanted to make clear in publicity transactions are good. Being social and talking to a homeless person is very good. We don't want to lose that. So we'll be doing it again. It's not like we forgot about it.
I think it's just a matter of time. The Swedish vendors of the similar magazine are using the same kind of technology very happily, and I'm sort of personally waiting to see the first street beggar taking cards or Swish. That will happen any day in Stockholm, I think. A little bit a shot on integrity issues. So the integrity and the sort of all the data traces we leave around us in society is a general thing, not only associated with payments, and it's a trade-off you do as a citizen. You want safety, but you be more monitored, or you want to have more efficient payment methods, more of an experience, but you get monitored. And I see that this is as a situation you have to face in a modern society. Perhaps we could be in the future have the possibility to sort of opt out a bit of the commercial world. I personally don't like the idea of having card companies monitoring my consumer patterns. If I consume too much fat or too much sweet things, I don't want my insurance company to be able to have commenting on this. So you should be able to protect the data that you create around you, I think.
Okay, and I'm going to come back to that. I'll come to you in a second. But we've just introduced the inclusiveness piece. So let's have a look at your responses to the question: do you think the digitalization of payments fosters financial inclusiveness? Yes, no, or don't know. Maybe we can put up the responses as we go. Tad, you wanted to say something.
Just on the aspect of anonymity, I think this is, again, one is education, that educating customers about who knows what, because it's not true that payment companies know what you're buying. They just know where you've been and the amount you spent. They don't know what you've bought. Same with banks. They just know how much money's gone off your account. They don't know what you've bought. So, but also it comes down to a cost. Also, customers quite often who talk about they want to have their anonymity. They're the same ones who've actually registered for the club card in the local supermarket, and the supermarket knows everything what they've bought, and they don't want to tell anybody what that's. The second aspect really is. I'll pass on that one.
All right. Yeah. Look. That's the response, and it's interesting. Okay, 68% say yes, 27% say no. I'm going to come to questions and answers with the audience in a little while, but who in the audience said a very vehement no and wants to say why very quickly? Anyone? Yeah, gentleman there. Can we get that gentleman a microphone? Anyone? Sorry. Yep. If you put your hand up again, I'll see you. There you go. Go ahead.
Yeah, just the basic reason I said no is because it depends on whether you can be connected easily or not, and the digital divide exists, so that will play into the inclusiveness.
But at the end of the day, the point you're making is that will change and it will become extremely easy, and then you won't have an issue with it anymore. Okay. Yeah, go ahead.
I wanted to relate on the things that were mentioned before by Mr. Thaddeus and Mr. Hans. In Denmark, there is a case where already another similar organization that is for beggars selling newspapers, they are already doing it with QR codes, and I checked that they are seeing positive experience. And what I want to relate to what Mr. Thaddeus also said is that regarding user experience, how we manage to do this, we do it by lean startup method, and before we develop anything technical, we firstly go into the root of the problem and see what is the perception of the problem at the side of the user. Otherwise, you can develop something really sophisticated in technical way, but when it comes to the use, if it's not simple enough, it would it will not come through. And that's why we see really positive experience when we connected ourselves with the fiscal registers, because on the user side, it's not much action to do. And on the shops or merchant side, they can self-register. They do not need to buy additional hardware, software. They do not need any additional investments. They just basically need to sign the contract that they are accepting the bills. And we see quite huge growth here in first 2 months that we launched this. We managed to cover over 350 locations, and when we did the self-registration, it goes 200 more. And how it looks like when I've been in the border, at the border of Slovenia with Croatia, there is a small town, Semic, and there is this small owner of the restaurant with cows and so on, and he did the self-registration, and I came there because on the map of our mobile wallet, he was on the map. And I came there, I ate there, I ordered and paid with M-bills. And at the end he said, how did you find me? Because I told that I'm from Ljubljana, and I said, look, you are on the map. And this is how we not just talk about going digital and green in Slovenia. This is actually doing the talk in practice.
Yeah. I guess that talks to your point. All right, let me go back to, but I want to delve a little bit more deeply into the privacy, the anonymity, and the risks there. Gianluca, how dangerous is this, what we're proposing?
So, how dangerous? It's a risk, and a risk needs to be managed. So there are two sides of them. There is one side of the individual privacy, and is the trade-off Cecilia was talking about. The moment we use Uber, we give them our location. So we are giving up our privacy to know where I am in order to get that service. So we make the trade-off decision every minute of our life. That is the personal side, the individual side. Then there is a responsibility that is the treatment of the data that gets built up. Treatment of the data done by the entity that is collating the data, whether it's a bank, the insurance, and so on. If you want, you can get also what you bought. So is a degree of responsibility of the entities building up the data, but then is the treatment of all this massive data. And we probably don't realize how massive it is. So Google calculated that from beginning of this civilization to 2003, there have been used about 5 exabytes of data, and now we do about 2.5 to 3 per day. So this is how much data is there. And data is a lot of information, not just on the individual, but on the whole society, on how the information flows. So there is an element of the responsibility of who gathers the data, but then a responsibility of how this data circulates within the country, within the entity, and across the countries. And the problem we always face is that as soon as you go cross-border or cross-activities, there are different rules, different regulations, and which all aim exactly the same point, but they are different. And in the bad intention, or whoever wants to leverage, that is what we call the arbitrage. So at that point, you start to leverage on these inconsistencies, and there are, yes, profits to make, but at the expenses of something else. So the use of the data is critical for a society perspective, and the key element to address is how, going forward, we are going to manage on a global, we're talking about protectionism, globalization, and so on. The data is global. How we treat it.
Okay, so managing the risk, as you say, and managing it in a sort of collaborative, harmonized fashion. Cecilia, I want to come back to something you said. That you talked about your insurance company finding out how much sugar you eat or how much fat you consume. That's not going to change, surely. Surely it's not going to be possible to dictate to one or the other, you can't share that data. There's no going back, I guess, is the point I'm making, and that's maybe the layman's fear here.
No, I don't agree with that. I think every government or every legislator in every country can put up rules and regulation for how data can be analyzed and distributed. I think it's up to each and every political system to make a choice on these things.
But there's always a way around it, right? And that is happening now. Rules and regulations are being put in place and people are finding a way around it.
Yeah, but then you sort of you challenge the objectives of the legislation, and then you usually end up in court one way or the other. So that's not supposed to happen, in my view, at least. If you have an efficient legal system, that is.
Yeah, go ahead.
Depends where you are. Okay. Because you may bypass the Swedish regulation sitting in an island in the Pacific. Yeah. That is the problem.
Could I just bring in one issue that is important here? We're concerned about the integrity, technology, efficiency, etc. But it's also important to remember one important thing. What we're talking about, money is very. There are different kinds of money. I'm just going to go do a little bit of a party trick here, and I'm a central banker, so this is not a very impressive party trick, but I'll do my best. There are two kinds of money in society. Most people consider this to be money. This is 200 Swedish krona. This is issued by the central bank. No one else has the right to issue this kind of money, and this is the classic version. But it's also the smaller kind of part of money in society, at least in the Swedish society. This is my debit card from one of the Swedish banks. This is where I have my deposits, and this is also money. I have access to money through this. And talking about this financial inclusion issue, what may happen in Sweden, and this is a memento for the other countries as well, is that if this disappears as a way of making payments, as a store of value, you are more or less sort of locked into the commercial banking system. And that opens up a variety of questions that is very critical to ask yourself before it actually happens. One of the things, for example, is that if you have a privately run payment system, there is nothing really that stops the banks or card companies to bump up the fees and lower the quality of the services, because that's how sort of monopolies or companies with high network effects can behave. So this is my starting point for why we, the Riksbank, need to look into whether we should provide a digital version of this kind of money, being able to have a claim on the central bank, so that people will continue to have a choice, because choice is very critical if you want to have people continue to trust it.
How far away are you from that digital currency?
It's hard. That's a difficult question. So we're doing a 2-year project where we're looking into all the issues we think we need to look into before we can make a decision whether we should launch something or not. We may end up saying, yeah, it's probably a good thing to do, but we're not certain about the technology, because we would never issue a currency that is a note that is easy to counterfeit, and in the same way we can't do a digital version that is easy to counterfeit. So we have to be certain about technology before we do this.
Okay. I liked your party trick, actually. I think central bankers are generally quite good at pulling rabbits out of hats, aren't they? Sorry, I probably shouldn't have said that. Look, you picked up your phone because I know what you're going to say, Primoz. We looked at that currency, we looked at the two currencies, and of course you're holding your phone up and you're saying that's another, that's a third, and that's your business. Go ahead.
I must agree with Ms. Cecilia that we need to give the users a choice. For example, what we notice when we speak a lot with people when they're moving abroad to other countries, they still get a lot of cash because they never know what will happen in the other country, even though if in the other country they are supporting many ways of payments, many ways of cards, you can still have a situation where you get paying just in cash. So this is something I also believe, even though I'm a promoter of cashless paying, even though I believe this, I see that will have to make a choice. And what we see with our mobile wallet is to make the users liquid in one way. They make the top up from the bank account to their mobile wallet. And what Cecilia showed, basically we want to save them the way to go to the ATM. We want to save them to get the only 10, 20, 50 or so much. They can get it to the last cent, how much they want. And this is their prepaid money on their account, and we are not interested in it, not charging it, it's theirs. And what we see as an opportunity is wherever they could go, that they could also transfer back this money and get the cash back. And we need to make them able to pay anywhere. And as Mr. Thaddeus said, they do not care about the payment. They care about consuming the good they are buying. And what is interesting, if you count all the time you invest in paying monthly bills, in standing in the line to pay with cash, and the other person counting it, it makes quite a lot of time. And our mission is to make this time as short as possible and to do the stuff you want to.
So they care about the ease of payment, is the point here.
Yeah.
I'd be interested to hear your take on the privacy piece and the anonymity piece and the dangers here.
It's interesting how everybody looks on the negative side. We're losing our privacy, but is anybody looking on the positive side? Perhaps I want to lose some of that privacy because I have benefit. I give the example of my smartphone, I don't know, 10 years or so ago, when we got smartphones and GPS, and you could switch that on, and nobody would touch it because someone would know where you are. So you wouldn't switch it on, even if you switch your telephone off, they know where you are because of other means. It's only when I got access to a map, a navigational map, that if I wanted to use it for free, I had to switch on the GPS. So I had the benefit, so I switched on the GPS, and so the benefit was bigger than my perceived cost. And I think the same here with data, because insurance companies might know what we buy. On the other hand, maybe we want insurance companies to know what we buy because we might get benefits from them. So let's give the consumer choice. Perhaps you're allergic to nuts, and so when you're buying some food which potentially has nuts in it, perhaps there'd be an application which will look through what you're buying and warn you, check with the producer and say, be careful, you've bought something with nuts. Or if you're for a gluten-free diet, or for a cholesterol low diet, etc., or you want to have an application which reminds you that you've bought something and the guarantee's finishing. So there's the upside, and we've got to give the consumer the choice, basically.
Would you say generally, a very perhaps a naive question, that there is a sense that the consumer is becoming less or more fearful of having everything he or she does watched? What do you feel in your country?
Yes, I think it all comes down to education, really. That we can either frighten them or we can educate them. We tend to be frightening them. We had a problem with one main bank in Poland a few years ago, when the chief executive said we'll be able to see who smokes and the insurance fee premiums will go up, and there was a catastrophe for that bank at that stage. Instead of giving the positive message, so it really comes down to education.
Go ahead. I want you to play devil's advocate here.
No, I don't smoke. It's back to what I was saying before. There are two sides of the story, and we have to look the different. I totally agree with Cecilia before. There is a decision the consumer is making, and that decision, we like it or not, we make it every minute. The navigation, the Uber or whatever else. But also in terms of the insurance example before, insurance companies are starting to ask if you want a black box in the car, and you pay less. So they may know how you drive or whatever. Some people may choose to have it, others not. So that decision happens. The question for me is always the other side. So that is the consumer side, and some of that privacy has to give up, and actually the consumer gives it up. In some cases, needs to give it up. For example, if we look at large illness, we were talking before the example of Ebola. Ebola is something very serious, and the most serious problem was air travel, that you may have been contagious and went through 5-6 countries. You were coming from Italy and before US, so was not an issue. Actually, 3 weeks before, you were in an area affected by Ebola. So the sharing of the data about all your travel, which is challenging the privacy and so on, actually helped to isolate the people that could, without even knowing, could be affected. And we saw in the last few years how the Ebola has been managed. So there is the need. But what the Ebola example shows is there is one side that is the decision. Sometimes, most of the time, the individual makes it. Other times, the governments have to make the decision for the individuals. But the area that I'm mostly worried about is the usage of the massive of the data. The Ebola example is a wonderful example where the countries coordinating and using the data, they manage to address a problem as big as Ebola. That doesn't happen every day. You need a problem like that for the countries to coordinate. The example Cecilia was using before about you end up in court, not necessarily. The problem is that you may be, I did the example of the island in Pacific, I may be in the UK and breach the Swedish law, because in the UK it's not an issue. So I'm not actually doing anything willingly fraudulent, but I'm breaching the Swedish law. I probably even know that I'm probably breaching the Swedish law, but I'm in the UK. In the UK, what I'm doing is not a problem. So until you have that coordination, that problem will always exist. So the challenge I put forward in the risk management and the cybersecurity management is how we secure this massive amount of data and to make sure that others don't, because there is people on it. My example of the credit cards, 40 to 50% per year are fraudulent, and they sometimes are systematic attempt by computers. We saw some examples. The examples are every day. What was oh my God, what was called the last cyber attack to all the system globally? I think crime. Okay. Let me cry, whatever. These are how it is. So Microsoft today spends 1 billion per year in terms of cybersecurity, and is growing. So the moment we talk about also fintech and so on, we obviously small companies and startups have to build up, but according to what standards? The standards of a small fintech company is not the standard of a bank, not only because the bank has more money to invest, but also because the standards and the regulation requires it. That difference, that gap. And it's not, okay, I want to compete more, so put the higher to them. It's a question of the investment, because Microsoft doesn't want to spend 1 billion per year, but they do, otherwise they go bankrupt within 1 day.
Go ahead, Professor.
Yeah, I would like to relate to what Mr. Gianluca said. As a fintech startup, I'm promoting that it's better to be regulated and to have frames that are regulating fintechs. Because if you meet the standards that are required for privacy protection, for security that you need, it's making not just protection for the users that are using the system, but also for the fintech standard, fintech startups that need to meet these requirements. And we could follow the role models of other fintech that have based their headquarters in probably London or elsewhere, but we chose to stay in our country and to acquire Slovenian license from Slovenian Central Bank. And what we learned from the users when we spoke about, there are many other also platforms across Europe that can be also present in Slovenia, but what the users told us was that we were physically present whenever something would be like wrong. They know where to get us, where to reach us. And also we as a fintech company, we need to have all the roles covered as a bank. We need to have somebody who is preventing money laundering and financing of terrorism. We need somebody who's taking care of payment systems and so on, not something that a regular startup would have, even though we are a smaller group. But this is something that protects even the fintechs as such not to make mistakes. And this is something I would like to point out, that the common standard is something that will open inter-country payments, what was discussed.
Okay, I'm glad you mentioned the regulation of fintechs. Both of you mentioned this because this is something I want to talk very briefly about. When for a fintech startup, Primos, when does regulation for you reach a point where it's stifling your innovation? Where it's stymieing your innovation? When do you, as a fintech, put your hand up and say, all right, look, I'm all for regulation, but this is just going a little bit too far now?
I like to point out our case. We didn't go and develop something before we reached an agreement, a confirmation from Central Bank of Slovenia that we are allowed even to make a pilot. Because in financial industry, it's like in the airplane industry. You cannot just test if the plane will fly with only one motor and see. You need to prepare the controlled environment, and our application was developed in an incubator of a company, Harcom, who does business for 25 years in electronic and digital payments for commercial and central banks. And we had the knowledge, and we first asked the Central Bank of Slovenia if we may test before we started to develop. And then we invested all the resources after we got the feedback from users, after we got the feedback from companies, and then we developed the first product and launched it after we got the license from Bank of Slovenia, Central Bank of Slovenia, which was in September 2015. And after that, we started launching it on the market, selling it, and so on. And this is something what we always do. Every new idea that we have as a fintech startup, we do not do it by our own, because we are in a strongly regulated industry. And if we would do a mistake, it would cost us more in loss of trust, in the damage that would happen if something would go wrong. Therefore, we are always making the preparations, invest lots of time in preparations. And yes, of course, in some ways, these legal frames are in some ways are suffocating us in some ways. But we took this as a necessary frame in where we need to work, and it's our industry.
I'd be interested to hear your view on this.
People trying to steal from each other is not exactly a new thing. Bank robberies and the robberies of value transports, that sort of things, cash in transits, have decreased, at least in Scandinavia, due to there's not much cash been circulated anymore. But instead, you have the cyber crimes. That kind of part of the world is evolving as well. And it's a constant struggle. The public sector, I'm going to be very broad on this issue, not too much details, but in the same way as the authorities measured the width of doors to vault, that was important perhaps 50 years ago. Now it's a lot about resilience in the various systems. If you want to participate in the central bank real-time gross settlement system, it's very much my house, my rules. You have to have adhere to very specific regulations. And one of the things that we are struggling with, I think not only in the public sector but also in private companies, is that you outsource a lot of IT functions. And in order to get the critical mass that you have the development and the security you wish, but then as a buyer of these outsourced services, you have to make sure that the technical standard is sufficient. So you have to know what you do when you pay for and buy these kind of services.
Ted, I don't know if you want to say anything on regulation. I guess the reason I bring this up, this is more the fintech piece of this and regulating fintech. I spoke to the former New York regulator about this recently, the fintech charter in the US and the uproar that has caused, this idea of regulating fintechs in the same way you would regulate a normal bank, a traditional bank. I mean, how far should the regulator go? Surely the regulator needs to give the impression to the financial technology industry that they are there to help rather than hinder.
Well, the regulator's there to protect the consumer. That's the most important. And protecting the consumer doesn't necessarily mean that we cocoon him and he has to use cash for the rest of his days. He should also be able to use these new instruments. So being a very highly regulated industry, banking, and I worked in a big global bank in Poland for 20 years nearly. If anybody had a clever idea, an innovative idea, guaranteed the whole of the risk department, compliance department, and everybody else would come down to us straight away to make sure we didn't have that idea in our heads anymore. So it's very important, and why they did that, because of reputation. It's obvious. I think it's very important that the regulator appreciates that and creates a so-called sandpit, regulatory sandpit, so that fintechs can experiment there. It has to be a very controlled environment.
Are you doing something like that in Poland now?
We are, because well, one of the reasons is, of course, we have a very good, interesting IT company in Poland who about 5 years ago has developed a blockchain currency, Polish currency. So what you're looking at in Sweden, and because of the regulations in Poland, they had to go and start up in London. And they won lots of awards in London because they couldn't do it in Poland. So we have to change that to allow startups and fintech companies to experiment in Poland. So it's something we are actually working on.
All right. Yeah, go ahead.
Can I just add one thing? Probably making a next step in the regulation. So we are talking about now fintech regulation, banking regulation. But we are always talking about payments. So that is in itself, when we talk about consistency of regulation, is cross-border, but is also cross-activities, cross-policies. And in the current G20, the German presidency, in the B20 summit in Berlin a month ago, there is taking more ground a different approach of starting to look at the regulation. No, at the moment, we are talking about legal entity regulation. You are a bank, you have a banking license, you follow a certain regulation. You are a fintech, however we define it, you follow another regulation, and so on. Actually, starting to, rather than, let's say, vertical, starting to look horizontally, you want to do payments. Whatever you are, if you are, then you have to follow certain regulation. Whoever you are. You want to do lending, then you have to follow a certain regulation. So not anymore a regulation by legal entity, but a regulation by activity. And this is not the way policymakers are thinking at the moment. Generally, people are not thinking, but is possibly an important step to make forward, because otherwise, the more we create separations, the more we go around the problem, or there will be someone going around the problem. And the speed is happening is just uneven. How long does it take to pass a law? How long does it need to make a startup? The speed is totally different. So it's, this approach is an approach that actually can deliver. So cross-border, cross-policy as activities versus legal entity.
Okay, thank you very much. Look, I want to come to you, the audience, now for a little while. I will come back to this inclusiveness piece before we close, but I want to give you an opportunity to pose your questions now to our panel on any of the above, anything we've talked about. Yeah, so I'll start with this lady here, and then we'll come to you. If you just wait for the microphone, tell us who you are and where you're from.
Hi, I'm Miriam, and I'm a compliance officer. Previously, I was working at Linklaters LLP, and now I'm being specialized in anti-money laundering and counter-terrorism. And my question would be to the person in the middle who was talking about data privacy and regulations. So I was asking, are you aware that the EU regulation of EU of 2016 that shapes completely for fintechs the way they treat data, private data? they profile data, they profile their clients, and fintechs or financial firms now have to nominate a data officer starting from 2018, I think.
Okay.
And a second question is about compliance, AML, and FT, on counterterrorism, and US extraterritorial sanctions, OFAC and embargo, and so on. You were talking about anonymous payment. Anonymous payment is completely not in the recommendation of GAFI or Financial Task Force, and also the fourth directive of EU 2015 applied to banks, KYC, and so on. And also you have the US compliance laws who are extraterritorials and applies to all financial firms that use US dollar in the world. And the sanction can be, I mean, automatic, even though if you are not doing business with them. So how do you see these things, and how are you coping with the new compliance regulations?
Go ahead.
Thank you very much. We are aware that data protection is getting more and more stronger, and this is something what we see as not as an obstacle, but as something that protects even the startup, the fintech startup as well. Regarding, we have the person who is responsible, as you are in charge for anti-money laundering and anti-fraud, and we have the measures that are taken in order to prevent this. Data officer in 2018, we will adjust to the law, make everything compliant with the law. Of course, we cannot otherwise function. But when you spoke about extraterrestrial US law, we are currently focused just on the territory of Slovenia, and we are monitoring and making our payments just with Slovenian entities. So it's a regulated environment in just Slovenian area. We are not currently making any cross-border payments as such. And regarding anonymity, when it comes to paying in a restaurant, the receipt has a QR code. If you pay with cash, the waiter doesn't know who you are, you paid with cash. The same logic is in our app. You just scan the code and you pay it, but when the restaurant gets the money, it gets it from M-Bills. It doesn't get it from John or somebody else, it gets it from M-Bills for the transactions that were made at that day all together, and it gets a list of what was sold and how much fee was there. So we are really taking care that we protect the privacy, and we see ourselves as a payment institutions. We do not see ourselves as a marketing agency, and this is something we are focusing on, easing the payment procedures.
All right, thank you very much. Yeah, gentleman right there.
Step up. Okay. Peter van Humbeek from the Social Economic Council of Flanders in Belgium. I would like to link this session with the session previously today on behavioral economics. What I heard today from you, several speakers have put the consumer central, the user experience. You were saying the consumer has to have a choice, he has to make trade-offs between, for instance, the ease, the comfort, and on the one hand, and giving up privacy on the other hand. We have to educate people so that they can make the right choices. But this morning they said, well, aren't we overestimating the ability of consumers to make informed choices, to make those trade-offs? As consumers, I think we are badly informed to make those decisions. We don't know what we're giving up. And even if we're good and well informed, we are not rational or less rational than we think. So perhaps there is a much more, a bigger role for government than we think. I say for government, not necessarily for regulation, but not just could help here as well, defaults, etc.
Very interesting. Thank you very much. I don't know who wants to pick that up. Yeah, you go ahead, Gianluca, and then Tad, I'd be interested to hear because you were talking about this as well. Go ahead.
No, I will answer in the example we did before between Ebola and Uber. In the case of Uber, the individual is making the decision, is giving up his privacy of where I am in order to get the service. That is a very pragmatic decision he's making. The Ebola decision and the sharing of that data and the use of that data, that is a decision that the individual cannot make. And you cannot choose, shall I share my data where I was or not, because of the benefit it may give on fighting Ebola. That is a decision that only the governments, and actually not our government, but the governments together can make. So it's totally valid point, but the two things are not separate themselves. There are decisions and decisions.
Of course, that's a very interesting point, is that we can educate consumers. At what point do we decide that they know what we've told them, they understand, and they can take their decision? Because do we take decisions that they're not educated enough? That's also a bad decision. Do we take the decision that they know everything? That's also bad. So I think this is where we need to be talking to the community, to society, and getting appropriate feedback and getting guidance from the community, really, to see where we need to protect and where we're not overprotecting.
It amazes me that hasn't happened yet, though. Getting that sort of guidance.
I don't think it's true. It's not where we do, but we do get guidance. Do we get enough guidance? Do we talk enough, or do we, as governments, think we know best and we dictate rather than listen to everybody that we should be listening to?
No, I think it's a very interesting question. Do we expect too much from consumers to make And I personally, I don't think you have to have. You shouldn't have to have a PhD in finance in order to make clever choices in society. But if you want to be able to make very sophisticated choices, you should be able to. But I think the great role for the public sector here, and if it comes to our business, which is how to create efficient payment methods and markets, there should be a public sector sort of default option. So if you're not interested in learning about Swish or apps or whatever, you should always be able to use a safe and efficient public sector offer. Cash used to be that, and it still is. But if people if it's going out of fashion, then we may have to upgrade and modernize our offer to society for those who want to use it.
Also, we have to remember to put everything into perspective, because as a minister in economic development, I don't know if I know everything I should know when I've ticked that box in Google that they know everything about me. So it's...
Yeah, that's a good point. All right, yes, let's have we've got plenty of questions. Yeah, we'll come to this gentleman there and then the lady there. Go ahead.
My name is Alex, and I work for a fintech company in San Francisco called Square. My question is kind of coming back to the notion of inclusion. So historically in society, there have been a segment of the population in many countries that doesn't participate in the formal banking sector, the formal financial sector. While we're kind of reinventing some of the nuts and bolts of the financial systems, are there steps we could take either on the public policy side or in fintech companies to increase participation and empower people to participate in the economy?
What I didn't hear yet from policymakers here, and what I would love to hear, is that they say, well, people need to make choices, but people need smartphones. Like my world for the homeless, to have a smartphone is really very, very, very interesting. It enables them to have contact with other people, which is extremely important. My street paper is like what we offer people, our homeless people, is some money, but also contact and being in the system. So I would say, if I see how many homeless people there are in Amsterdam, it wouldn't be very expensive to give them a smartphone and educate them on that smartphone. And there are NGOs that only deal in answering letters from financial institutions to people who've just made very bad choices. And we talk about consumers making choices. I deal with people that make very bad choices all the time. That's why they're homeless. Thank you for the question.
I personally don't really see that there's a tremendous problem going forward for the people, sort of the beggars and things like that. As an example, in the bank about 10 years ago, Poland was one of the first countries which was going to put chips on their cards. And the head of retail in the bank was very negative that we're going to suddenly ask our customers to put pins when they use their transaction. Well, they won't remember their pins, and we were going through this debate for a year or so, and how we're going to bring that in. But in Poland, Social Security is paid out locally by local branches. They had no problem. They ordered cards with chips, and they told the poorer people that this is a card, this is your chip, and you go away and pay, and no problem whatsoever. And just going back onto Square, I can see in a not too distant future, because already we're testing and piloting in Poland smart POSs, so software POS terminals, so basically an iPhone, a smartphone, that the poor people will get a card, and they tap your telephone to take money, and they'll have a card to go and pay in the shop. So I don't really see a problem for being exclusion for the poorest.
Okay, thank you. Yeah, lady right there.
My name's Anam. I'm originally from Pakistan, but I live in Paris, and I'm doing my master's work placement here. And I wanted to take the conversation a bit outside of Europe, and I was wondering if you have some thoughts on the sort of potential setbacks, but also the potential for fintech in emerging economies like Pakistan, for example. And I'm thinking particularly in terms of, what kind of physical infrastructure is necessary for developing such technologies. For example, how microcredit works in Pakistan or Bangladesh. You have access to really remote villages where there might be electricity cuts for several hours a day, but people have cell phones and they're able to transfer money through cell phones. So I'm wondering if you have any thoughts, for countries outside of Europe.
Yeah, thank you very much indeed. And I just want to draw our attention as well to some other questions that came in over the app. And one is from relating to Africa, despite the benefit, this is a comment, despite the benefits, Africans have never had the opportunity to have a philosophical discussion on cashless transactions.
Very lucky Africans.
I don't know who wants to pick up the point made by the lady here.
Actually, if I just start, I think it's a great example of Africa. The customer experience comes down. That was the best means, and they leapfrogged all of the problems we had in the West. In Poland, we leapfrogged. We didn't have checks. Yeah? So like in UK, they still have checks. USA, they still have checks. We didn't have checks. We leapfrogged that stage very, very quickly. And Africa is leapfrogging what the West has done. So bypassing cards and going straight into telephones. So I think it's an excellent example of what can happen.
Yeah, I could just tag on to that. Infrastructure, mobile phone system, and work on joint infrastructure when it comes to payment solutions. Not having the banks cooperate on this, so you can cooperate on prices, on quality of the services, but run the systems jointly or in cooperation with the public sector. That has been the way Sweden has moved into becoming more cashless.
Just to add, in terms of, I don't remember the exact numbers, but quite close to Sweden and Scandinavia, one of the countries with the highest cashless is Kenya. And the big speed up in Kenya happened with basically the smartphone, because the level of ability to read is low, and actually the apps just tapping the things was a way to bridge payments in a much faster way. The second element is widening the question is that the next G20 presidency after Germany is going to be Argentina, and although the agenda is still to be written, but one of the key elements of Argentina is answering your question, is exactly thinking about how technology and digital can be leveraged better in emerging and developing economies, in particular in terms of formal and non-formal economies, basically black and gray economies, i.e. giving ability and access to platforms for free, so that the speed and easiness of use can help a lot of the black market to surface thanks to the simplicity of usage. And this is going to be a theme unless they change mind, but a theme of the next G20 presidency.
Okay, thank you very much indeed. Yeah, there's a lady in the middle there.
Hello, I'm Talisa Zerhausen, German Afghan working on Central Asia here at the OECD. And I wanted to follow up on the inclusivity question, but in more practical terms, because you had said that Sweden most probably will become cashless quite soon, and that you'll even, well, maybe even beggars will use Swish or cards. So in practical terms, how will that work? And also even on a macro level, because everywhere that I've lived before, to open a bank account, I needed an address or income or something in that regard. So in macro terms, aren't we leaving a huge segment of the population behind? So refugees, unregistered individuals, and so on and so forth. Thank you.
That would take a long time to go through all the details, but just a short version of this. So there is an EU directive that is being implemented now, which gives people in the European Union countries substantial rights to get access to a bank account. And the refugees that are coming and waiting for to know if they can stay or not, they get a so-called prepaid card. So before they actually have this something called personal number, which give them possibility to open up a bank account, they have prepaid cards from the government that the government has procured. But I can stay on and we can talk more about it if you're interested. And the Swish thing and beggars, that was more of, I think that is the next step, because most people have bank accounts in Sweden. It doesn't matter if you're homeless or not.
Okay, thank you very much. Yeah, yes, question there, and then we'll come to you in the front. Go ahead. This is a good sign, so many questions. Go ahead.
I'm actually British Zimbabwean, but I work at the OECD, and my question is to do with how the idea of cashless societies is being tried in countries that have experienced hyperinflation, and this is one idea that the Zimbabwean government is actually exploring, albeit the policy infrastructure is not there, and the mechanisms to actually enable citizens to participate fully in this cashless society are also not present. I just wanted to hear what your thoughts are on how fintech can be used for other monetary policies and other fiscal policies. Thank you.
The short answer is no, in the sense that I don't see, I can't really see any particular fintech tool being used as a tool for fiscal or monetary policy. That's sort of hard-working policy making, tax system, public spending system. What do you prefer to use them? Monetary policy is about sorting out the timing consistency problem with money. So fintech is sort of frosting on the cake rather than will change those things considerably.
Okay, thank you. Yep, gentlemen here. I'll take 2 or 3 more questions. Keep the questions really tight, and then we'll fit a few more in. Go ahead.
Yes, I'm a retired senior economist of Citigroup. I use major European banks and US banks and have been the victim of card hacking and card duplication. I haven't heard anything from you about the infrastructure that enables the easy use by a consumer of his card or mobile wallet or whatever, and the banking system and the SWIFT system through which all of those payments have to pass through. My impression is that companies, including banks, don't like to spend enough money on my security and the security of my data. I'd like to hear a little bit more about that.
Hello. First of all, one of the problems, of course, is for consumers in the States is they have baggage, they have checks. Then they went from checks to cards and stripes. It's only, I think, about two years ago, it was mandatory in the States to have cards with chips. Here in Europe, we're mandatory, I think, about 5-7 years ago. So our consumers are much better secured, though.
I thought you touched on this.
Yeah, I thought I did quite a lot, starting from the example that about 50% of the applications that come are fraudulent. So it's, I know my bank, but in general, banks spends a few millions per year in terms of the security. And actually, the bank own interest is in terms of the security. I was saying cyber security, but overall security, simply because when it's evident that it's a fraud, then the bank is paying. So purely from a selfish perspective, it's needed. It is a problem. It is a big problem, and the more cashless you go, the more easy is to infiltrate the systems. And it goes back to the massive investment that is needed in cybersecurity, but also the importance to manage that data, because it's happening through the data. That is not just someone tapping a code and entering and using your card. It's actually through the data usage that fraud happens. So it's an extremely important point.
Okay, thank you. Yeah, lady there.
Hello, my name is Gul. I'm from Australia, and my question is for the banks, but on online remittances. So as globalization happens and we have growing migrant diasporas around the world, there is a big opportunity and a great increase in need for transferring money online. And because a lot of emerging markets are unbanked, the main primary mode to do that is through Western Union and sort of organizations like that. So what is the opportunities for banks there to provide, I guess, equality in money transfer through things like blockchain and fintech opportunities?
No? Anyone? Go on, Gianluca.
So basically, your question is about fees, bottom line. So the banks, like anybody else, has to have a return. The UK was the first country that started to have a cash machine for free for all usage. Why did they do it? Not to be the first, but they realized that there was a bigger return by the distribution and the usage than actually that pence chipped in. There are countries that still charge for that cash machine. So ultimately, the answer to your question will come by the distribution, and simply will be the business model that will be more beneficial from banks and non-banks activities to transfer that to make the transfer for the user for free, because the return is somewhere else. And also in terms of the free transfer, be careful sometimes, because a lot of the things say free, but they are not. For example, FX and exchanges. Yes, the thing is for free, but and an exchange rate that is such a rip-off that is not free for them at all.
So, of course, whether it's for free or not is secondary to customer experience, and that's secondary to acceptance. You're not going to make cross-border payments if on the other side there's no acceptance of the product. So that's the problem there. If I could just make one point, because I saw on the screen there was an interesting point someone's put there on that when you make payments by card, you don't see how much you're spending, which is absolutely true. We see that I think it's about 25% more you spend when you have a card. Now that's one of my experiences in Poland, that I saw that Monday morning our customers were going to bank ATMs and withdrawing cash. And my experience is that that's the way they manage their family budgets, and that's something which is missing on electronic payments.
Yeah.
That it's very easy to spend all of your salary on the day one of the month, and what do you live on for the rest? So we're missing products which force you to keep money for the rest of the month.
Absolutely, and I'm very glad you picked up on that, because I'm going to finish it up now, and I'll give you a very quick point on this. But you know, I personally, you know, as a father of 2 young kids, think that it is a great point that we haven't really talked about. You know, we've talked about education, and a question here, you know, to this overconsumption is how can we use fintech to teach financial responsibility among young consumers if it's so easy to spend money? I don't know if you want to take that.
Yes, this is something that we noticed when we spoke with our users, that when using bank cards, you never know how much you still have on. And also, this is something that we integrated in our software by always seeing the balance and by being a prepaid system. So as much as you top up, as much you can spend. So this is the limit that you present to yourself as a user. And also I spoke before of the financial discipline. Many of the either monthly bills that come are still somewhere in paper, and people forget them, people lose them. And at the end you get charged interests for not paying. And this is something what we see that helped the users to remind and to pay on time. And we notice that now in 2 years that we are on the market, that the attitude to mobile wallet is changing, and also the attitude towards paying, because people become aware if they don't pay, the company will not be able to pay the salaries and so on, and it's a circle. Money is like blood circulation. It needs to circulate all the time. You cannot stop it and put it somewhere. So, all right, money's like circulation. I'm gonna stop it on that note. Look, thank you very much indeed for your questions. I think I'm not going to give you each an opportunity to do a sum up. I think we've all had a pretty fair crack at a number of subjects today. It's been a fascinating discussion. So thank you very much to you for your questions. Thank you very much indeed to our panel for their candor today. Thank you very much indeed. Don't forget your phone, by the way. I won't. I appreciate it.
But I have learned that all you give is all you get. So give it all.